in the Takaful industry. Every year we come and sit here and we say how much the Takaful industry has grown, and it is true. The Takaful companies are growing. A big part of it, I think, is because most of them are relatively young companies and are enjoying relatively high growth rates. But I think the question that we need to really address is by how much has the Takaful industry increased the market? And that was the promise, original promise of Takaful when it first started, that it's going to bring in new insureds to the industry, and therefore the industry itself is going to grow. I'm afraid, in my own experience, I've hardly seen that. The vast majority of the Takaful companies have competed on exactly the same business that was there before they came to the market, and usually the only way they could win the business is through relatively more competitive terms. I think with the exception of Malaysia, most of the other markets are primarily focused on general Takaful and working on the commercial risks, and I don't think that's really where the value added should have been. I think there is much more potential on the family Takaful. I think also, given the demographics of some of the countries, and a lot of the governments now are moving away from their social responsibility, trying to take it off the government budgets and moving it to the private sector. I think that creates an opportunity for the personal lines and for family Takaful. And this is where I think the Takaful message is most effective, and where a lot of the populations in some of the countries where Takaful is available, they will be more influenced or more likely to buy Takaful products. But if we continue focusing on the commercial products and competing on the exact same business that has always been competed on, I think the chances of success are lower. And of course, it's very difficult to get any real data on how much the market has grown, but I think this is worth some attention. From my discussion with most of my Takaful clients, most of the business they've written was business that was insured the year before with a conventional company, and they've won it over. And if we really need to grow the market, the companies need to focus on more niche products on the personal lines. And once that happens, I think the Re-Takaful capacity will also follow.
Zubair, do you have any comments from the Shariah's perspective on what you can do as a group of scholars to perhaps provide that product differentiation? And
Max mentioned in his speech, which is that scholars need to be involved in Takaful, more involved, and I agree with him completely. I think scholars, I don't think it's enough for scholars to attend the Sharia boards and discuss Takaful options at that level. I think there needs to be scholar hands-on involvement within the company, in-house, looking at working on a daily basis, making sure the activities and the insurance process is Sharia compliant. For example, if there was a Sharia scholar within a Takaful company, making sure that all the transactions are done in a Sharia compliant way, and if there is truly a need for to apply the principle of necessity, then the scholar there and they can apply the rule of necessity. The scholar needs to scrutinize the deals. For example, if a deal comes in and says that we need to do this in a particular way because there's lack of capacity, then the scholar can question that. Have you looked anywhere else for Sharia compliant capacity? The Sharia scholar needs to look at the quotes, for example, to make sure that the quotes from a Sharia compliant capacity provider is not excessive or is excessive, and they can apply the necessity rule. So I think scholars need to be hands-on, get more involved, get involved with the day-to-day business, and hopefully that will, I think it is needed, and it will improve the Takaful industry.
Okay, thank you. Maybe that's a good point at which we can open up to questions from the floor if we've got any questions. Gentleman at the back with the red tie. No, it's not on, but
hello. Yeah. Angelo Anson. I work for Aon Market Security. I think the issue that the brokers have is, I mean, the role that we do is to ensure that we place business with markets of good credit quality. So we do have Takaful markets in our so-called approved list, but they're on the whole very small. And it goes on the list because our brokers on the ground need Takaful quoting markets. But I think what I'm trying to get at is, I mean, for the Takaful market, I think to increase their presence. I know it's not all about size, and it's, you know, a lot of the Takaful companies quantitatively, at least in recent years, have improved both on the earnings and operating performances. But on the whole, they're still very small. And we're finding that, despite what you read in all the publications out there, that a lot of Takaful companies can monopolize on the economic growth of some of the Asian countries like Malaysia. None of them, I think, from what I've seen from the reported accounts, none of them are able to benefit from the economic sort of growth in Malaysia because of their size. And a lot of them are just writing personal lines business. So, and I think the cost structure is also something that we need to look at, because part of that is, I think, the reason why they're not growing from the capital-based position very quickly. So, and you know, it's a competitive market, and we're seeing, from at least from a capital-based position, growth has been very small. But yes, I mean, GPW is on the rise, but from a very small base. So I think there's an issue all round, I think, not just, I mean, there's the structure, the cost element, I think the capital base, and as I say, I mean, we'll all look at and apply, every market is unique, and I think you hit the nail on the head, market information, what percentage of their GPW is, I think all around market information is lacking, and also lack of transparency, for instance, in terms of the shareholders' investment side, how that is being invested on the policyholder side, deficiency of policyholder reserves. I think there's a lot of, and I think you actually hit the nail on the head on Lloyd's, on Cobalt. I spend a lot of time educating the market security department on how unique the capital structure is of Takaful companies. And because of their size, I think I need to do it. But I think that there's something that has to be done all round. I think mainly it's on the size, the education, the capital structure of the Takaful companies. I need to remind them once every 2 years how it all works, because they're all relatively small. The earnings performance is volatile, although it's improving in recent years. So I think it's the issue, I think, is all round. So I don't quite really know how to go about it. Thank you.
So I think, thank you, thanks for those observations. I think very interesting, and bears out a lot of what we've heard said here. Gentleman in front.
Good morning. Actually, I think the panel has painted a pretty bleak picture of the facets of Takaful and Re-Takaful. So my question would be particularly to Mohammed. Mohammed, on the non-marine treaty bouquet side, how difficult is it to place almost exclusively with Re-Takaful companies, bearing in mind that most, if not all, the major reinsurers have a Re-Takaful arm? And then the question that follows that, is it an issue of capacity or quality? And finally, then, we are not focusing as an industry on the thin edge of the wedge, because probably, like conventional reinsurance as well, capacity constraints exist in many specialized classes. Mufti mentioned agriculture. That would be in reinsurance as well. You could have difficulties in placement. So my question to you is that if we take the large sectors of non-marine treaty bouquets, how difficult is it? Thank you.
Thank you, Mr. Akub. I think if we calculate the total Re-Takaful capacity, you might find that it's sufficient for some medium-sized treaties in the region. However, the reality is, yes, there are several Re-Takaful companies, and if we also include the Re-Takaful windows, because without including that, then I don't think we have sufficient capacity. The problem is that those capacities also, like the conventional reinsurers, have their own appetite, have their own target markets. So if you go to most of the markets where we operate on a treaty side, I say in every case it would be almost impossible to complete 100% of the placement with Re-Takaful companies. And that's partly because either the program is big or because not all the Takaful or Re-Takaful operations have appetites for this kind of business or for this territory. So I think the capacity issue is a problem, and I think is becoming even more of a problem because we have lost some capacities, pure Re-Takaful capacities in recent years, which has had an impact. But my bigger concern is, on the long run, it seems to me that it is extremely difficult to expect a new startup operation to come up and write pure Re-Takaful business. I think the only successful models we're going to see moving forward are Re-Takaful operations that are it's either a window or it's part of a bigger conventional company, because then they can take advantage of the diversified pool that the parent company has. They can share the expenses, and I think, if you look at two of our diamond sponsors, be it Hannover Re-Takaful or Africa Re, I think their model makes sense and is successful because it's part of a bigger organization. On the primary side, again, I think for the Takaful companies, because also they're all relatively young companies, they're facing the exact same problems that a conventional new company would face. I don't think the problems they're facing is because they're Takaful necessarily, because they're writing all kinds of business. It is extremely difficult now in these market conditions, I think anywhere in the world, to start a new Takaful company, and even more difficult to start a new Re-Takaful or reinsurance operation. You're competing against huge companies with a very diversified pool, and they are in a much better position to take advantage of any new market offering or opportunities than a new company. And also add to that, given the significant increase in the number of companies, a lot of the markets now are facing significant shortage in skills. Attracting skilled management and employees to new companies is becoming very difficult. And again, that's why some of the conventional reinsurers who have established Re-Takaful operations are able to utilize their existing resources to service the Re-Takaful business.
Time for one more. Gentleman just over to the right there.
Good morning, Tariq Osman from Sudan. I think my question is for the whole panel. It's a philosophical one, sort of. Do you think the viability of Takaful on an even playing field without changing the grounds or getting legislation to protect it, can it compete with conventional? That's the first thing. If the answer is yes, then I think the whole field is open and you need to create the mass or the numbers by itself by competing first, and then the demand will show itself. If not, then you have to create a critical mass of a new market that's a completely different market, which you were talking about before, which isn't touching the normal conventional insurance. And that market in itself will start creating the Shariah basis because they'll be asking for the Shariah basis out of it, which is basically out of free will, rather than being legislating or things. So my question again would be the panel, and I think the bleak idea would be if we can't develop the product itself that it can compete with conventional in itself, then the product itself is not the right product without any legislation. It's just made for a specific niche market.
You should start with Zubair. Go on.
I've had this discussion before. Is Takaful a completely separate product? Do we compete with the conventional market? I don't think it's a completely new product itself. Takaful, it's what conventional insurance does and what Takaful does the objective is the same: is to protect assets, is to manage your risks, and in that sense, it's the same product. It does the same job. Where it's different is conventional. The process is a particular way, and Sharia compliant insurance, Takaful, Islamic insurance, has a different process, and that's what makes it Sharia compliant. It's the process. So I don't think we're competing with the conventional world, where we're basically working with the conventional world, but in a slightly different way, slightly different product, I would say. In that sense, I think you're right. You know, there's a lot of work to be done. I think we need to educate people that this is not something completely different. You won't have the different issues, different obligations, different requirements. It's still the same, but the process, which is worked behind the scenes, that's different.
Let's run up the line and then Zubair, you go next.
Well, just briefly, yes, I hope so. This is my answer to that. I think you need competition, you need competing types of products. And if there is the continued demand for this type of product from certain jurisdictions, then it needs to exist. So, yes, I hope so. But the governments may need to help.
From what I see, the majority of quotations that leave the business I work within are competitive with the equivalent conventional terms. Now, okay, the broker may then go to another carrier and get a conventional terms, and then that changes completely. But if we're working with a carrier, a number of them commit to us to, if they've released conventional terms, they will release the same on a Sharia compliant basis. So now I appreciate that we're only servicing a small percentage, but I would like to hope that we can compete with the so-called conventional business, and but it's baby steps at the moment, so still a long way to go, but definitely sort of positive shoots appearing.
I think we need to differentiate here between competition on individual policies, on individual treaties. Of course, the Takaful and the Re-Takaful companies will compete against the conventional insurers. They will win sometimes and other times not. But the key issue here that we cannot forget the basics of the industry. I mean, insurance, reinsurance, and retrocession, the whole concept is based on maximum possible diversification of the risk. The bigger the pool, the better off everyone is. And as such, I think Takaful needs to be seen, as mentioned earlier, as a segment of the industry overall. Because it's going to be, I don't think it's financially feasible to think that Takaful, Re-Takaful, and we're going to have retrocession on Takaful independent of the rest of the insurance market. I don't think it'll be cost effective. I mean, we're now discussing the lack of capacity on the Re-Takaful side. Let's not forget all the Re-Takaful are buying retrocession from the conventional market. And that will continue to be the case. So while there is competition on the daily running of the business, I think ultimately this industry is part of the insurance industry as a whole. It complements it. It's try to expand the entire industry and should not be seen as a competitor to the extent that we're trying to create a completely separate market detached from the existing insurance industry.
Okay, thank you very, very much. And I think we'll end on that note. I think it's a very broad-ranging discussion and an interesting point to end there on where we see the market actually today and developing. I mean, for my own part, I'm an optimist. I think the issues that we've talked about today are about joining dots. I think Anne talked about the education program. I think nothing happens by chance in this world, and it's very important that the creation of relationships and understanding of how things work is taken forward, and from that business develops. We see that in our own business, and it's the only way that any business really can develop. It doesn't just happen because we have something called Takaful. It involves a lot of shoe leather and understanding of what that product is. And yeah, there is a point of differentiation clearly with this segment of the market. So I think with that, I'd like to thank the panel. I think it was a fantastic session, and if we could thank them in the customary fashion.